Thank you, Mr. Chair. Thank you, Chair, for joining us today. In my state of Iowa, we have over 400 insurance companies, many of them very small, but they invest over $66 billion in our local economy. When I was on the Financial Service Roundtable last week in my hometown of Des Moines, we had everyone around the room really focusing on the severe impacts of your agency's intentional or unintentional, but I'd like to get to the bottom of this, hard close and swing price proposal on Main Street retail investors. Now, just earlier today, you highlighted the fact that, this plan would favor small businesses. But honestly, I don't know that they feel the same way. I'm very concerned about swing pricing and hard close proposals that have drawn strong opposition from both industry and consumer advocates, with most recently the Consumer Federation of America arguing it would basically create a two-tier market here that would benefit sophisticated investors at the expense of Main Street guys back in my hometown of Des Moines. The rule would limit access to trading and impose additional costs on hardworking Americans' 401k plans, our nurses with 457 plans, teachers with 403b plans. In fact, your proposal acknowledges that these middle-class investors may lose their ability to manage their investment through the close of the stock market at each day. So, Mr. Chair, my first question to you is, do you believe the 401k saver should have access to current pricing of mutual funds they are buying or selling?
I think that 401k, as well as many other retirement plans, benefit from this collective investment vehicles.
Yes. So in other words, the pricing of a security is a crucial factor that savers should consider when making this investment decision, correct?
If I understand your question, yes.
Good. Then why is the SEC effectively picking a winner model and a loser model?
We're trying to address a systemic risk that exists in our capital markets right now, that in times of stress, the open-end bond fund community has come and called upon the Federal Reserve for assistance. And so it's really a matter of how wide is our, if you call it, public safety net. And I know that my dad, if he was in trouble when he had a small business, he wouldn't have had the U.S. government help bail him out.
That's right.
We're trying to lower that risk in these bond funds.
Well, so I want to get into the details here then, because mandating a hard close for mutual funds, this is not a new idea. And in fact, it was proposed over 20 years ago, back when I still had all brown hair and was working for then financial chairman, Senator Chuck Grassley across the aisle, a good man from Iowa who recognized this, and I believe talked with your predecessor about how dangerous this could be. In fact, in 2004, he proclaimed that hard closes will be the end of same-day execution of trades for many retirement plan investors. So, Mr. Chair, it's my understanding that swing prices currently as an option for funds used today, isn't it true that no funds have utilized swing pricing since the SEC's authorization in 2016?
Well, I'd have to get back to you. I think it's had limited use at most.
The answer is no. If no funds have found it worthy, why would the SEC mandate it?
It's really to address the systemic risk issues, and a voluntary system to do something to protect the overall system sometimes doesn't work as well as when you actually have to.
So, Mr. Chair, I believe that's your perspective, but we have had so many folks who have told us the direct opposite, and I hope that you would be open to hearing them. I know that you're providing that feedback comment, but overwhelmingly, it seems like this is falling, for many of my folks, on deaf ears. So I want to say, what makes you believe the retail investor would not face the same negative impacts and burdens now based on the decision that you're proposing going forward?
It's really a risk trade-off, but right now the American public is holding this stress risk that our Federal Reserve might need to help support this overall collective investment vehicles, and we're trying to address that through these rule proposals. But again, the public feedback is helpful.
So I would offer that you're taking a long vision of something that we have very little feedback on. Isn't it true that you have proposed roughly 50 rules since the spring of 2001?
In the last 2 years, 46 rules.
All right, very, very nice. I think you're working your way very quickly to 50. Has SEC done a cost-benefit analysis that impact the aggregate of these rules?
We do cost economic analysis on each and every one of them, and sometimes the subcomponents on each and every one of them.
So, Mr. Chair, as we move forward on this, my aim, and I think many in this room, is to help the mid and low-level investor be successful, not just in their retirement, but their future going forward. I hope you'll be open to listening to them. I yield back